Hello everybody, my name is Crypto Observer and welcome to the CryptoCat City webinar. And what we're going to cover today will be risk management. And this is what CryptoCat has wanted me to cover with you guys because he feels that risk management is a very important topic that we should know as a trader. And just a background about myself. I am a software engineer with a computer science background, and my trading experience, I only properly started trading last year, but I feel that I have had a lot of experiences with different type of markets. So initially I started off with stocks, some forex, but I delved into cryptocurrency properly last year, and it has been quite a good experience because even though it's very volatile and dangerous, it's also very profitable. And this is where risk management comes in, because without risk management you will not be able to keep your profits at the end of the day. mm, I am currently residing in CryptoCat City as a tutor. I do one-to-one tutoring. I have tutored a few of our fellow crypto kittens, but I hope that I'll be able to help more of you along this path of trading in the future. Okay, you can always follow me over here. My Twitter handle is crypto_ops OBS. Okay, so this is what we are going to cover today. We are going to cover what is risk management, why risk management is important to you as a trader, and why I feel that it is one of the most important concepts in trading, and how do we actually apply risk management to your trades. So in this application, I'll be covering generally stops and profit-taking points, because this is a very general webinar, and if you want me to go into more detail, into more strategy, you can always talk to me next time personally in the future, and then I'll summarize everything for you, of course. Okay, so why is risk management so important? Because you want to reduce the impact of your losses. So uh, as a trader, the most important rule, this is rule number one, protecting your capital, because every drawdown in a certain percentage, let's say X percentage, will require more than X percent to recover it, more than X percent of returns to recover it. So let me give you a very simple example. You have 4 Bitcoins and you have suffered a 50% drawdown from 4%, from 4 Bitcoins to 2 Bitcoins. So to return back to 4 Bitcoins, 50% is not enough, because 50% increase from 2 Bitcoins will be only 3 Bitcoins. You will actually need 100% returns to return to your original capital. And this graph shows the importance of maintaining your capital and preserving it at all costs. Of course, some of you might be more willing to take risks so as to generate greater returns, but you have to be aware that there is of course a potential downside to whatever trade that you are involved in, and if the downside is too large and you are being exposed to this downside, it will really negatively impact your returns and your capital in the future. Okay, so let me start this off with a very simple quote by Sun Tzu. Victorious warriors win first and then go to war, while defeated warriors go to war first and then seek to win. So what does this actually mean for you as a trader? This means that as a trader, you must be able to plan ahead and look ahead in time. And you might be wondering, how does this actually apply to risk management? This is just a military strategy. How can it impact the behavior of a trader? So this is what I mean when I say planning ahead. It means that you have to set your stop loss and take profit points. Because risk management is not just about managing your strategy, it's also about controlling your emotions. When generals go to war, they have a plan on where to attack, on where to defend, and where to hold. Similarly, as a trader, when you enter, you need to know where you should pull out, where you should take profit, and you cannot let your emotions run the day. So this would be a very general overview on the different types of stop losses, and I feel that there are many advantages and disadvantages looking at the different type of stocks that we have: structural, trailing, temporal, and volatility. And it's up to you to decide when you are looking on which to use when we are having a and it's for you to decide which of these stocks that we should use when we are taking a look at taking a look at the market that we are currently in. Okay, so the importance of the stop loss is that it protects you from an overexposure to a price movement opposing your position. So this is just a very long sentence. So to put it simply, it protects you from opposing price movement, which means that if you're in a long position, which generally all of us are, because you can't really short a lot of cryptocurrencies uh, except on margin, such as on Bitfinex or on Poloniex. So when you're going long, you do not want to be caught when the market dumps on you. So yes, so let's say, for example, you're buying way above support, you need to have a stop loss ready because you are unsure whether there is a dynamic support forming or it's actually going to drop back down to the original support. So talking about support, this is where we will move in to structural support. So this is a structural support. I'm sure everyone can easily see what the structural support is. It's just like a sort of a bottom is a sort of a trend line. You can draw a line on the chart or use EMAs to identify the support. Okay, so this is a very basic way of identifying supports. Look at the bottoms and where they are. But if you are more interested on where to set your stops actually, because CryptoCat has told me that some of you have been stopped out of trading a few times. Let's say, for example, you set your stops here, but you get stopped out because you place it right on the line. So this is actually due to stop hunts. Two reasons. First one would be stop hunts. So what whales are actually doing is that they know that a lot of us are using this point as a form of support. So they'll try to sell through this support and sell through the buy orders on this support and then trigger all of the stop loss orders. So you have to place it maybe a few more percent down from this support to ensure that you're not caught out by the stop. Okay, and the second point would be that you might be caught up by arbitrage trading. So what this means is that on some markets, let's say on Bittrex and Poloniex, they both feature the same coin. For example, Litecoin. And what's going on is that the trading on both markets are done concurrently, but they are not at the same price all the time. And what happens is that when there's overselling on one side, the arbitrage trader will actually buy from the cheaper market and sell it on the more expensive market. However, overselling on the cheaper market will actually lead to your stop losses getting triggered. So overall, the whole market is still not being is still showing support, but you're just on an exchange which is usually of a lower volume, which leads to you being stopped out. So I must say, to avoid being stopped out, you have to place your stop losses a bit lower than what most people identify the support to be. Yes, because the more people who can identify this support as a support means that it's a very strong support. However, it may lead to possible stop hunts or yeah, whatever I've just said. Okay, so the next one, trailing stop loss. So it increases your potential gains compared to structural stops. So let's take a look why. Let's say if you're having your target over here at 500 satoshis for CR coin, you will not be able to hit this target, and then you will just lead, you will just lose out on all of your gains here. So what a trailing stop loss does is that you identify the price at a constant, let's say 5% or 3% below the current price, and then you will set your stops there. However, this will require you to follow this price change constantly. Yeah, so you can either use these two methods, staying at a constant how many satoshis or at a percent below the price, or when it touches a certain EMA of your choice, maybe 5 EMA, 7 EMA, or a EMA with a shorter that looks back at a shorter duration into the past. And the third type of stop loss would be a temporal stop loss, is where you look for a better trade elsewhere. So let's say this cryptocurrency, let's say Ripple, has been going sideways for 3 weeks now. Sorry, not 3 weeks, like 3 days now, and then you are not getting your profits. No targets are hit, but your stop loss is still not being triggered. So maybe after a few days, you might think, okay, hey, there's actually plenty of better opportunities out there in the market, and it will be good for you to look into these opportunities, as the current one that you're currently holding may not turn out to be as good as you thought. So this is where you will apply a temporary stop loss, but be aware that you must have this stop loss in mind before you enter the trade, and not do it while and not exit on a whim. Yes, you have to set these stop losses when you enter the trade. And the last one is sort of a volatility stop loss. So what you actually do is that you identify the current volatility of a market before setting a stop. So you use this by using the ATR. ATR is the average true range indicator. So what it does is that this actually just generally measures the volatility looking back at a certain number of candlesticks. So usually put 2 times for stocks and 3 to 4 times for commodities. And this is a stock. This is actually Visa, and you can see that stop loss for volatility is good when you are a trend follower. So you can see that, let's say you want to enter this trade when it touches the EMA, and then you set a stop loss of 2 times the ATR at this current point in time, and this will be a stop loss. So this will protect you from a downwards trend when it cuts through the EMA, but when it bounces off, you can actually take profit over here. Yeah. I feel that this is a bit dangerous in the cryptocurrency market, because you can see 20 to 30% gains or losses on every day. So if you want to use this volatility stop loss, use it on coins that have a bigger market cap, such as Litecoin, Monero, Ripple, or yeah, on those, because it's harder to manipulate and it's harder to move the price so drastically. Okay, so now we're on the second part of our presentation, which is how to take profits. So many of you will ask, let's say, what's the target for a certain coin, for a certain trade after we enter a trade, if I post a chart on Twitter. And the most important point is that you have to take profits at partials. So what does this mean? It means that you have to set multiple targets for your trade before you enter it. And at each of these targets, you take maybe 30%, 40% of this trade out, and then you take the profit. So even if you actually stop out, you will still have a small profit at the end of the day. And this is very important because none of us can see the future with 100% clarity. So you must be aware of the potential that the trade may not hit overly high target, maybe 50%, but maybe you can take profit at 5% to 10%. If you think about it, like how much does the stock market grow? If you invest your current money in stocks or bonds, you'll only be in the single digits every year. But yeah, in cryptocurrency, you can get single digit returns every day. So why do you have to be so greedy to maybe take a look at 50% profits when actually maybe 5% profits a day is more than enough to make you happy? Because uh, that is the power of uh, compounding interest, yeah, if that's the correct term. So this means that even though your initial capital is very small, if it compounds at maybe 5 or 6%, at the end of the year it can increase by about 100-fold. So let's take a look at how we can take profit. So this is, what's this? Oh, I think this is LBC, and this is how we identify resistance points. So let's say this is a long-term support, which, okay, sorry. There's a question, Robert Evang, what do you mean stop loss at 2 times ATR? Okay, I'll go through this at the end of the presentation. If you have any questions, just type it down in the chat, and then I can go through it with you after the presentation. Yes, when there's a Q&A session. So resistance points occur at previous support term resistances. So this is when the trading range of the price is ranging between support and all-time high. So this can very easily be identified when you look at maybe a bottom or consolidation point or accumulation points. And as you can see, these are the points where you can take profit or when you are buying down here on the support. So if you take a look at a downtrend over here and then you notice this is the long-term support, and you will realize that there are 3 potential profit taking points over here which you can actually take profit. So the first one will be around 18,000, second one will be around 19,000, and last one will be 22,000. So this identifying of resistance points will be down to your chart reading skills and will be down to your how adept are you at seeing whether the price will be able to break the previous support that has turned into resistances. Because definitely, if we take a look at the second spike up, it was unable to break the second target, and after that it went below the first target towards long-term support again. So what we are looking at here would be, let's say you buy at this price around 14,000 satoshis, and then you set this target of 22,000 satoshis because this price was hit last week. You will not be able to gain any profit, lock in a large enough profit at the end of the day if you went up and then you sold somewhere around here at the support. But if you set a certain target, it will be able to help you to lock in some profits. And the importance of locking in profits not only helps you to increase your win rate, it also frees up some capital for you so that you will be able to enter other trades and look into better opportunities in different markets. Oh, and the last point, set partial sales slightly below this points, because this are easily identified resistance points. You don't want to place above them, you don't want to place on them. You have to place like maybe a bit I would say 0.5% to 1% below these points, so that your sales will be hit before everybody else, and you'll be it means that when the resistance is hit and it bounces off the resistance, your sell is assured. Yeah, so just play it safe and keep it simple. Okay, so another type of taking profit, another strategy for taking profits will be using Fibonacci extensions, and this is when prices moon. Yeah, this is the phrase that we all like to use. So what we actually uh, use for this would be for all-time highs. There are a lot of other um, traders who use different type of graphs, but I like to use Fibonacci extensions. And the most important thing is that you have to plot your Fibonacci extensions correctly, because if you don't plot it correctly, you will not be able to see the place where the price will meet resistance. So let's say, for example, I think this is Factum. A while ago last month, it hit an all-time high. So for the past year, so what this means is that if you identify the two resistance points, which will be 1.6 and 2.6, you can see that there's actually small consolidation and resistances in this area. And if you set, let's say, your first target and second target over here, you'll be able to gain a certain amount of um, a profit at this point, rather than just holding on to this trade forever. So I have a personal pet peeve when my students tell me they want to hold on to a trade forever, because that isn't trading at all, that is investing. And if you're looking at investing in cryptocurrencies, you shouldn't be looking at price action, you shouldn't be looking at supports, resistances, or whatever. You should be looking at the fundamentals. So if you're telling me that you're buying at this price and you're holding it forever, it's like comparing apples to oranges, and it's not the suitable mechanism to judge whether a coin is of maybe times 10 or times 20 value in the future. Yeah, so if you want to hold on, it's please don't do this. Just set your sales if you're trading. Yeah, and this is another point. Sometimes you may have to replot a fib extension if there's a retracement. So let's say if it retraces down here, you may have to plot extension again for this dip over here to correctly identify the next target if you're buying when it hits the EMA. Okay, so there are a few strategies in taking partial profits, and I'll share two of them with you. So these are my two favorite ones. So the first one will be that you set three targets: 40%, 40%, and 20% for each of these three targets respectively. So this means that the first and second target are the more realistic ones, and the third one might not be as realistic. So even if it doesn't hit the third one, you'll be able to secure some profits. And the second strategy will be to sell your base coin on the first target and let remainder runs. So I feel that this is what is actually meant when they say, like, let winners run, cut losers short and let winners run. You cut losers short with your stop losses and you let winners run. But you can't let them run indefinitely, because what goes up usually comes down. So take some profit and then let the remainder run, because you have already secured your base cost, and whatever that you're currently holding is profit. Okay, so this is what Sun Tzu says, and what all of you should do, and I hope that you have done, would be that you set your stop losses and target before you start trading, because emotional trading is never a good place to be. Neither is let's say when you're angry or when they're sad. You feel the fear, you feel the anger when the price moves. And yeah, that's why you should always have a plan. Okay, just let's get down to the 3 rules, risk management rules. So the first one will be the 4% rule. So the 4% rule is that you should never put more than 4% of your account equity on any given trade. Like, um, I'm sure many of you have heard variations of this rule. Sometimes it's 3%, sometimes it's 4%, sometimes it's 2% or 5%, but it's based on how risk adverse or how risk tolerant you are. I feel that in this cryptocurrency market, maybe 3 to 4% will be an ideal number. And when you begin, as I've said before, you should write down 3 numbers for every trade, or more than 3 if you're having multiple targets. So an entry point, a target point or target points, and maybe a stop loss or stop losses. Rule number 2, stop trading for the week if you are down 10%. Okay, this is a typo. It's actually 10%. Sometimes it's 6% for some people, depending on how risk tolerant or risk adverse you are. Yes. And this sort of a stop loss is actually helps you to regroup. So if you take a look at top trading firms, even top traders, they have stop losses. So if they make too many bad trades in a day or in a week, they get stopped out and they are not allowed by the trading firm to continue trading for the rest of the day or the week. So it gives you some time to think whether the trend has changed and whether there are other market forces. Is it on a downtrend now, or maybe the market makers are trying to put the price back down into the accumulation range. So it's time for you to think of other forces. Stop looking at the price and look at something else. And always remember that capital preservation is key. So keep it around 6 to 10%. Don't lose 30% or 50% in 1 week. It's not going to be very easy for you to gain all your profits back. Okay, so this is a quote by Alexander Elder. So what he says is that, show me a trader with good records and I'll show you a good trader. So what do I mean? Okay, let me go to the sheet, the Excel sheet. Give me a moment while I open it. Oh, there's one more question. What is the top of the fib retracement touching there? Okay, I'll go through this again at the end of the session. We are reaching the end. I would say in about 3 minutes to around 5 minutes. Okay. Okay, so looking here, this is sort of a journal I keep. So this is the currency pair, the position size, direction, entry price, stop loss, take profit, and exit price. So this are some of the examples that this is an example of a trading journal, and this is actually what I provide to my students. If you are keen in coming on board and letting me review a strategy and have a talk about it, this is what I provide to my students. So if you don't have this, it's alright. You can just use a simple Excel spreadsheet to identify these 3 points: this stop loss, take profit, and entry prices. And these are very important for everybody who trades. So this is an example of used up. This is done by, where is it? Yeah, that one was done by one of my students. Not too good. You see, all making losses. But what matters is that you should be learning from each loss. Even though you are losing, you're not losing a lot. So it means that you will be able to learn from your mistakes and survive to trade another day. Yeah, so you can take a look at this. Even though this person has been losing, he's still surviving, capital is still preserved, and it's not he's not being run down by minus 30%, minus 50% losses at the end of the week. Yeah, and this is what I provide my students. This is just like an overview, trade journal overview. Okay, let's take a jump back into this presentation. So these are just some tips and tricks. Enter a trade only if it's favorable to you. So this usually means to me a risk reward ratio of maybe a reward to risk ratio of 2 or 2.5 and above before I enter a trade. So this means that I can be more than 50% wrong of the time and still manage to get some profit. This means that not taking a position is also a position. Just keep your Bitcoin as Bitcoin, your USDT as USDT. It's okay to sit in the sidelines sometimes if you're uncertain about the market. No hoping, no panic buying, no panic selling, and no emotional trading, of course. And the last one is nothing is too expensive or too cheap. Just let the market decide. You look at the charts, look at the price, and see how it goes on from there. Okay, so this is the conclusion. Capital preservation is of the utmost importance, and uh, just remember these 3 rules, and you will be able to learn more in no time. Okay, yeah. So before we end, let's. I'd like to go through the questions first. So first question. It's about ATR. Okay, if you have any more questions, just feel free to type into the chat. And okay, so how do you identify ATR? So you will have this ATR indicator down over here, and then you put your cursor over here. Okay, how about this? You just go on trading view. You need to have this ATR range ready down for you at the bottom, and at this entry point you can find this average true range at this entry point. And over here for Visa it's $1.13. So what this means is that if you're setting 2 times ATR as a stop loss, you'll be setting 2 times $1.13 below your buy-in price. And this is similar to any cryptocurrency. Let's say for let's say this coin, the ATR is 100 satoshis. You will be using 3 times ATR, 300 satoshis below your entry point, and this is what your indicator will be able to tell you. Okay, and the next question, what is the top of the Fib retrace touching? Uh, is it this one? I think you're talking about this one. So this is actually a Fib extension. Sometimes it looks like it's floating, but it's actually not. It just looks like it's floating on this chart, but if you use other okay, let's try. These other indicators, you're able to see why this is a resistance point. You can always take a look. A low. So for Fib extensions, you take a low, take a high. Give me a moment. There's something wrong with my mouse. Okay, so what we do is that this is the floating point, was it? So let's try and see whether it's actually floating or not. Let's zoom in at this point. Seven, six, five. Okay, so it looks like it's floating over here. So it is meeting resistance and is unable to hit this 1.618 target over here. Yeah, so it's floating. But if you take a look at other indicators, maybe RSI, you can see that it's probably overbought over here. It's going up, but the volume is not convincing compared to the volume over here. Okay, yes. And are there any other questions? Yeah, okay, so if there's no questions, this is how I want to end off this webinar. So this is what I like to tell everyone. Give a man a trade and he will have a good trade. He'll be rich for a day. But teach a man how to trade and he will be rich for the rest of his life. So um, I'm interested in educating and giving back to the community, but I have a schedule, of course. So if I'm interested in looking at when I'm free, if you're interested for some coaching lessons, I will be over here. Just drop by this URL and see when I'm free. So I do free consultations, 10 minutes for free, half an hour sessions for 0.05, and 1 hour sessions for zero point 0.1 Bitcoin. So just take a look. So what I will be doing is actually less of this because I will not be covering general strategy unless you really want me to do so, because a lot of this general facts and figures you can learn online by yourself on the internet, or learn uh, from Investopedia, Baby Pips. There's so many resources. So you can actually look for me if you want to ask somebody about your current trading strategy. Why isn't it working? Or maybe you would like something which works maybe a bit more than average, because I cannot give you any strategy that is 100% win. And anyone who claims to be able to do that is a liar, just a flat out liar. Yeah, we can't win all the time, and this is where risk management helps us to keep our edge. Yeah. So, there's one question: will I share the Excel? Unfortunately, the Excel will only be used. Will only be used by my students because they pay for my lessons, and I feel that it will be good to um, for them to learn about how to risk manage on a template. Yeah, and I put quite some effort into making the Excel, so that's why I'm only willing to share with my students. But maybe I can have a chat with CryptoCat and see what I can do. Yeah. Mm, are there any more questions? I will be online for the next 5 minutes, and if there are no questions, I will be uh, signing off. Yeah. just type the questions over here. Maybe 2 more minutes. Don't be shy, just ask. Okay, Dracon, isn't it more easy to use APIs from exchanges instead of writing it on an Excel? Yes, this is what I've been thinking about doing for the past few months. I've been thinking of making an app which not only helps you to trade on exchanges, but it also records down your trades. So currently there's an app that does it. It's called there's an iOS version. It's called Polo, Polo. So after you download the app and you buy the pro version for about $10, what happens is that it allows you to trade, but it does not allow you to set let's say stop losses or certain targets, record down your targets. And yeah, it's good if an app is able to do it. Okay, and Excel is definitely the old school method. Yeah, but it's a good idea. I've been thinking about doing it, but sometimes when you're trading all the time, you will not be able to develop these applications. Yeah. Are there any more questions? Oh, sorry, I didn't see Alessandro's question. To draw a good extension, you have to take the third point to where the first point is. Yeah. So you must make sure that the let's go back. You must make sure that the 0 is over here and the 1 is here, because if you are plotting it at this point, it might not be as accurate, because there are many different ways to plot fib extensions, right? And this is the way that I find is the most accurate. Some people move it up, move it down on a current price, but I think this works pretty well for me, so I'm sticking to it. Okay, last minute. Okay, so if there are no questions, I'll just wrap up. Currently, with a market update, so currently, Bitcoin has broke out to all-time high. Hopefully, this isn't a week of uptrust or a bull trap. Yeah, hopefully it isn't, because we never know in crypto. So maybe they are trying to get everyone to buy and they're exiting the market right now. But no, I'm just kidding. Who am I kidding? Okay, so if this continues on, what will happen most likely is that the altcoins in the next few weeks, they will be able to break out of a lot of their descending triangles, hopefully, and after bouncing off long-term support of maybe 3 months, they'll be able to make a comeback, and we'll be able to see the bull market that we had in around June happen again for September. Hopefully, we will never know, because 1 month in crypto is about 10 years in stocks. Yeah, this is what I like to tell myself. Okay, so this is Crypto Observer signing off. So if you're interested in uh, signing up for any of my coaching sessions, you can always go to this URL over here. Or if you just want to take a look at some of the charts and calls that I make, just follow me at crypto_ops over here. Okay, peace out.